Hello, Warriors. How's everyone doing today? AJ, Saloom, welcome to Face. Michael, Sinatra. Hi, Bran. Kman, how are you? James, Ryan. So, good morning, Ryan. How are you?
I'm good, very well, thank you, mate. You?
Pretty good. What lit up the pound a little bit? Was it their bond auctions going well, or what was the reason behind the
Sticky
outperformance?
CPI. Sticky CPI.
Okay, all
Another set
right,
of numbers that keeps the cut walls from the door, and
all right.
obviously hitting that big 126 level.
All right. And tip of the hat to Blake. He said that EG looked vulnerable. It's a hell of a candle, 4-hour candle. So, any new conclusions after yesterday's action in the euro? Still looking at this possibly being a low here, Ryan?
Yeah, it's tinkering around that area. It's holding below sort of the 80 handle, which is going to potentially be a bit significant this morning. It's making the breaks, it's holding the breaks.
Yeah.
Still, we've still got a zone down to 108.30, so it's a heavy traffic area. So I'm not surprised to see it, grinding a bit through that. But it's not looking like it wants to bounce right now.
Yeah. Yesterday, Blake showed that Head and Shoulders breakout and the dollar definitely follow through. I don't know where his neckline would be. Good morning, Blake, but probably around. I have the line right here at 102.80,
Yeah, I've been
ignoring the
looking at
spike.
103. Yeah,
103-ish?
yeah.
Okay.
And good morning,
All right.
guys. I'll
Good
let you
morning.
continue your conversation.
Okay, and Canada continues the little push. I think 136 is still possible. Um, any comment on commodity currencies here, Ryan? Aussie is, between 50 and 100 pips. Looks awful. Of
Yeah, it
buy
does look pretty
zones.
bad.
Yeah,
It's holding the brakes, but we are into that next big zone. A lot of people have got this zone on the chart from around 65.40 down to sort of 65.20-ish,
yeah,
give or take a few pips. You can see that going back into December when we were last down here, how tough that support was. So I've taken a little long down here at 39, just playing that zone, and
okay.
we'll see what it wants to do. It's been a decent move down from those 68.50 highs. Now we're potentially hitting one of the levels where it may run into a bit of trouble. We'll see what it does from there.
Yeah, big picture, I was looking at 65. It's been, potentially an important level for a right shoulder. Here's the left shoulder. This
Yeah.
left shoulder got all the way down to 4.5. So, I'm thinking euro could still trade, if I'm right about the dollar's upside, 107. So that's another, 170 pips.
Yeah.
And I was going to key the Aussie buy off that because the Aussie's weaker. If the euro's going to get down there, I wonder where the Aussie would be. But I don't see it getting any worse. I didn't draw fibs, but I was figuring 65. I would start down to
Six, six,
64 and 4.5 is
yeah.
extreme, right?
65 or 64,996 is the 61.8 of the
uh,
of that rally up.
all
So
right.
yeah, your
How do you
65 is
enter a
a.
limit order like that? All
So
right.
yeah, it's yet another support point. That 60, this area 65.40 down to the big figure is pretty important. It could be a bit of a maker or breaker.
And here's the Canada again up at 136. The next fall could be pretty big if this is real and this is just a failing rally 32 to 39. You get 1.618 from here and it gives you 124. So, and this should be, actually the Aussies rally in pip terms was bigger than the euro. So
Yeah.
you end up with 1.618 of this from wherever the low comes in. That could be pretty big too. That was, 630, could be 1,000 pips. if it's 1.618 from down here.
Yeah.
And this is what makes me think it, why I'm looking at the long side of euro, because of how and where it stopped, right at that moving average, and that would be a breakout to me. So, I think that's going to be a very important area if euro could get back up here. Let's see, where's this moving average come in? 780
on the weekly. Yeah, we got
Yeah.
the 200 DMA at what, 48, 108, 48.
Yeah. All right. But this is important. Cable did the same thing with the moving average. I mean, to the pip, it rejected it. So, this is going to be a big move when we cleared the highs from, what was it, a month ago? So, good morning. Okay. And thanks, Ryan, for your input. Let me go over to my trading warrior brother Kman.
Hi, Dale. Hello, everybody.
Hey, buddy, I want to start with silver with you. You have any levels you're looking at to buy this stuff?
Yeah. As I said, I'm trying to be patient and see for how much longer this dollar strength is going to play out. But yeah, those mid to low 22s, I may start to add just shyly, and then wait to see if we can get into the 21s at all. No, I'm keeping the finger on the pulse. Let's put it that way. Around mid to low 22s, I'm going to get interested again, unless we get like horrible economic data in between also, but or before that. But yeah, I'm still interested there.
Well, maybe it's going to be the pop in yields. 10-year had a pretty good day yesterday. So like the dollar, it's pushing a breakout. We just moved sideways. We were talking 4.25 last week before we had this pullback on the last I think it was the PPI. But maybe it's going to be rates that create the last decline. This actually measures 430. Okay, so we'll see. But there's moving averages at 4.25.
And those prior highs around 410, 15, maybe already enough to create that extra little push. Possibly if we get good retail sales in a bit, or just needing to reprice the repricing of the pricing of rate cuts. It's all about repricing the repricing, and it's a possibility that we get up there to that 415, 4.25.
Okay, so maybe the correlation with yields and the yen, even though the yields are running way behind it, at least they're kind of moving in the right direction.
It's definitely
what in the same direction, not right direction. There's no right direction. It's only being on the right side of direction. So, what are you thinking here, man? I mean, we've had one hell of a rally to 48. I think it.
So basically, if you look at what happened at the end of the year, in December, we had November, December, we had this big setback, and we are still correcting that. Look at the yields; it's not too far from it. And then the yen went probably too far compared to where yield differentials were, just because of that year end, But yesterday I was highlighting the top of the daily cloud, 146.75. It just made firewood of it, It just ramped through it. And the problem with the yen, again, is not only dollar yen, but it's also those yen crosses. If you look at stuff like sterling yen, even euro yen, well, comfortably is a big word, but back through 160, it's all... it's still a problem of the yen, where Ueda and friends are expected to not move anything before March or the start of the new fiscal year, and that's definitely weighing on the yen. And the combination of that and those higher yields is for sure keeping the yen firmly under the cosh right now.
Yeah, guppy on the verge of a new high.
Yeah, and the thing is, yen has abandoned the risk trade in the middle of 2021, and we can some days we see, or it can give the illusion that yen is trading with risk, but it's not trading with risk at all. It's purely trading on differentials and expectations right now, and just the fact that it's just too difficult to stay long yen for longer because it's still costing you a lot on the carry.
Okay. All right. I was just, looking at Bitcoin, and one of our team members caught the top in it. This to me looks like, 30,000 as possible. I know that some wave guys are saying this last push, this was 4, was 5 and of 1. All right. So, you get a wave 2 pullback. That's where I think it's going. The cross marks the spot. That's where the treasure is buried, under there. That's what I think. Also, oh yeah, we have some risk off going on today. So
have you looked at the Chinese markets?
It doesn't really translate in FX the risk off right now, right?
Well, maybe
on the dollar side it can, but
yeah,
it's more repricing of it.
Maybe this is what gives a dollar the jet fuel to get up towards 105 if it really gets going, because yeah, so I'll look at the FXI in a minute, but I was looking at this, under this level, it's going to look pretty bad. NASDAQ is weaker than the S&P today, and under here, it's going to look pretty bad. Looks like we're going to have at least, maybe some type of sharp correction for a week or so.
And one of the things, and Kman, rightfully so, FX hasn't really responded to, any type of risk off. We haven't seen really risk off, but you have Asian markets are China, the China 50, or you could probably look at the FXI. We're at new lows of the year, and taking out levels from 2022. And then, you have the dollar MEX that's at the 200 DMA today, tagged the 200 DMA. You wouldn't expect that in this situation.
It exploded. That's what made me think risk on could happen, Blake.
But that's because Trump is God's caretaker, as one video apparently came online yesterday.
What?
That apparently there's a video where he says, like, God looked down on his planned paradise and said, I need a caretaker, so God gave us Trump. That's your movie MEX, by the way, huh?
No.
If you look for anything else, you try to hide behind risk off, but no, it is nightmares of walls being built again around Mexico that gave the MEX, the dollar MEX, that lift. And it's actually not a joke, because one big bank actually called it and hit really the nail on the head, saying that if Trump gets reelected, the MEX will sell off. And I think that's
I guess that you think about it, that's not a really far off idea. And with the Iowa caucus, come and gone, the outsized showing of President Trump there, and his popularity. I mean, yeah, limited participation due to it being negative 20 degrees Fahrenheit, but whatever. I
read this, Blake, that Iowa picks corn and South Carolina picks presidents.
Iowa picks corn and South Carolina?
Yeah.
Oh, all right. Well, it definitely isn't.
But it does look like he has a lock on the whole deal.
I think so too. I think it.
So I mean,
it does. But going back to Kman's
could you have
point,
imagined that 4 years ago that we'd be talking about this right now?
No, I'm surprised we're still talking about 80-year-old presidents. Period.
Yeah.
Like, it's just crazy. Anyway, You know, it's wild. It's wild. Anyway, going back to like the dollar max, I could see that though. I mean, if the closer the President Trump, you know, gets to clinging US presidency again, I could see the dollar max getting absolutely smoked as a result. That does make sense to me now. So
okay.
anyway.
And anyway, and they've been saying things have been there's a lot of gentrification in Mexico. So along with the appreciating peso, yeah, you know, it's become too expensive for the people who have been there for 100 years to live in the same neighborhood, and that's going on. So actually, um, Mexico having a little shake, you know, might be better for, you know, the local population. Because all the funding money found its way down there, and it just outpriced the problem. It's a gentrification, I believe they call it.
Oh, okay. It's not
Yeah. No,
gentrification.
Gentra.
Just kidding.
Yeah.
All right. Hey, Dale,
Go
we
ahead.
got US retail sales today. You want me to take over the charts here?
Yeah, go ahead.
All right. So as you know, good morning, guys, and good morning, everybody. One of the, you know, major things is going to be, you know, US retail sales, obviously, and you know, the data that we're looking for is, you know, market's looking for a little bit better retail sales today. And you know, it's always hard, always very difficult to bet against the US consumer, that's for sure. But you know, going back to the dollar max, you can see we're approaching the 38% retracement. There's the 200 DMA. I mean, I'm long the dollar max from 1711. So down here on the breakout point,
Nice.
that's where I'm long. And you know, if you're following around along the you know, trades room, you know, you can see like the positions that I'm in, and you know, where I just took off the dollar Swiss longs, all that funny stuff inside of these chat rooms. But I'm sitting here looking at the dollar max and looking at, you know, other US dollar pairs, and you know, I think there's good opportunities for either situation today, because if we do have a weaker retail sales number, you can look at the sterling that's, you know, had a really nice bounce off of that inflation data today. And that inflation came in hot, guys. I mean, you know, how's the Bank of England going to take that? We have Bailey speaking later this week, don't we? Like tomorrow, if I'm not mistaken. I have to go back and look.
Yeah, at some point. I can't remember when. It might even be today. I'm not sure. I'll have to check
Or
it.
did he speak already? Hold on. Let me take a look at I gotta look at my schedule. I thought he was speaking this week.
I saw it for yesterday, but haven't seen
It looks removed. Yeah, it was supposed to be for Thursday, wasn't it? But now I don't see him on the schedule. He was speaking to the you guys have a lot of lords and houses. I'm not too sure which is what, but anyway.
Also, Nancy Pelosi said that her gains last year is that she just got lucky buying options.
Oh yeah.
Just want to let everyone know that. Kind of reminds me of Hillary Clinton made $500,000 in cattle because she read an article in the Wall Street Journal.
Take them all down.
Huh? What?
Take them all down. Take all those crooked people down.
Yeah.
Anyway, hey Dale, no.
I got a pitchchfork.
Come on, get out of the politics. Get your out of politics.
All right. Sorry.
Here.
Anyway,
gosh,
you're gonna have
so
to
on weak retail sales, you could probably have that sterling trade back up towards resistance here, I would think. But on a strong number, you know, you look at the euro, and yeah, you were talking, or you were talking about the euro sterling earlier, but look at the euro, it's still trading really heavy. Take a look at the dollar Swiss. It is breaking out to the upside. We have dollar strength coming through different pockets. You got the dollar CAD. The dollar CAD is rallying right now. And what if crude oil actually breaks down, which by the way, crude's at triangle support right now. If it breaks down, this dollar CAD is above the 200 DMA. I took my longs off yesterday, and I've been riding those longs for the last, you know, week and a half, 2 weeks. And we're above the 50 DMA now, or right at the 50 DMA. So you can see
61.8 there. I'm Blake.
yeah, I mean, that's entirely possible, I think. Now, The dollar yen, I have been looking for a move to the 147.50 level. And I know you and Kman had this conversation about the dollar yen. It is really, in my opinion, up against, I mean, yes, we're above, previous support, current resistance above the 618. But I care about the daily closes, especially on really big levels like this, when you have, multiple levels of confluence. So we'll see by the end of the day where the dollar yen settles out at, but we are really quite strong. And one of the other things that has my attention right now is the 10-year. I mean, look at the bond market.
Yeah.
Here's notes. We're right off of the 200 DMA. What if that breaks? If that breaks, yields are going to scream. And you can see the two, here's the 10-year. We're going to just start screaming higher. 30 years was the
leading the way.
It was. You had 2-year yields that were breaking down at the end of last week, 5-year as well, while trying to, and then the 30-year is leading the way, as you pointed out, Dale. It's pretty remarkable. So, I think you got to keep a real close eye on bonds, especially if we have strong data. Because if the retail sales come in strong, bonds could move lower. Stelios has been pretty active in our chat rooms talking about how the market is very, very aggressively and poorly positioned short the bond market. And we could see a squeeze there and yields come down. It's possible, but I think we have to have the data support that. And right now, US
Why
data.
not like a 38% correction of this move or something like that, and then it goes again, or halfway back. TLT halfway back's around 90. I've been talking about a correction since par on TLT, which is a 30-year. So, well, it's a 20-year.
Yeah, I
Pretty
mean,
good picture.
Yeah, look, I mean, TLT could really, I guess, could probably come down. I had this purple line is
okay. You got 91.75, 60.
Yeah, somewhere down here. I guess what we could do with TLT is do something like this and see where that retracement would take us to. I mean, we're getting close to the 38% retracement, which closes in right around the 50 DMA. Anyway, bond market should be in focus right now, I think. Schwab just released earnings. It's down a little bit pre-market, just FYI. We have a lot of these, banking stocks that have been releasing earnings this week. But the euro sterling, this is pretty key support. What do you guys say about this, Ryan? We're really threatening. I mean, this is the pound exceptionalism, UK exceptionalism, that you keep talking about since there's people running around shopping and stuff. So what's going on here?
Yeah, a bit more the same. The data's backing up that exceptionalism, if you like. It was a bit of a delayed reaction. I thought it would have done that move to the 70 level pretty much straight after the CPI, but it took a while to get down there. I've got support down there at that 70 level. But then you got the next support underneath there at the 50s, just from those prior lows that we've seen down there. But it's that's the thing with the euro sterling. It doesn't look like it's breaking anywhere just yet. We're still in this bigger 85, 87 range with the odd extension. So if we get down to 85s, I'll be looking at picking up, adding back to my longs or adding more to my longs. I'm still long. But yeah, it requires patience, does this one.
You pared back a lot of your longs when we were up here above like 86.50, didn't you?
Yeah, up into those highs, 87s and whatnot. Yeah, I got in at 85s and I was knocking it out all the way up. I'm happy to play the range for now, but if the pound gets more evidence that it's going to be stronger, if the economy holds up over the eurozone, you've got to be a bit fearful for that 85 level, and I'll be happy to flip to a short if that's what the data tells me.
Yeah, I guess if we broke that green 85, this is the 85 pence level, that would be
84.80,
really,
yeah.
That'd be ugly. Yeah. That would be ugly. All right. Well, thanks for talking about that. So real quick, since I have you and your attention right now, what are you looking for with today's US retail sales? I mean, that's the data that's really front and center right now. Is retail sales. What are you looking to trade? We do have some Fed speak a little bit later as well.
I think we need a big number. All the expectations are 0.2, 0.4, 0 point this, 0 point that. So there's not any, with 1% expectations for the data. And it is December, so it is holiday data, which means it can be quite volatile. Again, I'll probably look for the same sort of reaction I was looking for in dollar CAD yesterday over the Canadian CPI. The dollar remains strong. If you get a decent dip in the dollar, the numbers are soft but not horrendous. Then I'd look for a bit of a fade trade. I didn't get that dollar CAD yesterday, and it rallied.
That dollar CAD gave all sorts of opportunities, especially if you tried to play into the data, you just got rolled over.
Yeah, well, I was bid at 34.40 on that CPI. It got to 45, but I pulled it on that horrendous Empire data. I pulled my bids on that data, so it got down there. It did as I expected it to do, i.e. dip and rally. I didn't get in it, so I'm looking for the similar perhaps today for the dollar. If it's a soft number, get a decent dip, maybe dollar yen or something, and or euro dollar, and if it hits the levels, just counter trade it.
Yeah, remember we have this inverted head and shoulder pattern for the dollar index that still suggests that we're moving towards 105. Now we're not going to do that in one fell swoop. Obviously, you can see we're stalling at the 200 DMA on the dollar index, but bids or as I said to Dale a little bit earlier, dips down to 103 should find buyers now. So I was talking about this in the chat room, and I'm gonna say this for you guys. I'm gonna give you a little bit of a freebie for those of you that are not inside the ForexAnalytix community. You're not inside the chat room, but you should be. It's only $1 to try it out. Download the mobile app, get inside of the chat room. To get in the chat room, you just click this little button right here next to your icon, your avatar. But what I'm gonna do today is, you can see that the Aussie is below the 50% retracement. I am selling any rally in the Aussie dollar today. If the data comes in weak, I'd like to see the dollar come under pressure at first, but then my expectations would be that the Aussie would roll back over with risk, because stocks at first, if retail sales data comes in weak, you'll see a little bit of a ramp up in the stock market, pre-market, but then, for all intents and purposes, without a consumer, and if the consumer looks a little, vulnerable, the US economy is then vulnerable as well. So I think that risk will roll over in a situation like that. So I'm going to look to play Aussie dollar on any bounce back to 66 cents. I think the Aussie is going a lot lower. And let me just show you, because Dale didn't pull it up earlier, but I want to pull it up for you guys. You can look at it as CFD like this. We'll look at, you can look, I'll just pull up any CFD here. This is the China 50. I mean, we are just getting, yes, Mark, if you're listening in, it's getting clobbered. Chinese markets are just getting destroyed here. And here's Hang Seng. Look at the Hang Seng. I mean, that's a Hong Kong stock market just getting smashed. Anyway, I think the Aussie is just going to continue to play into this, China weakness. Remember, they didn't cut their 1-year lending facility on Monday, which is everybody scratching their head saying, I cannot believe that they're not doing this. Hey, I'm sorry, Kman, we got just a couple minutes. I didn't mean to talk so long. What are you looking at today, and what are you looking to play?
Yeah, good retail sales should continue to be dollar supportive. Yeah, it's a very, very shallow expectation of everything, so there may be a bit of a surprise. Well, I'm still, I actually bought a bit of Euro Swiss again on Jordan's comments this morning. Finally getting his comments saying that he's happy where things are, but as well saying don't completely destroy our good work. So, but I still think Swiss will remain on the defensive. Apart from that, short Euro sterling, yeah, pretty big zone in the 65 area on the Aussie dollar. I'm going to pay close attention to that one. And that's mainly it, to be honest.
China's
ahead. I'm
floating
ready
a
to
$1
sell.
trillion bond. I'm hearing they're going to float some type of gazillion-dollar bond.
Yes,
Ooh.
that sounds like a great idea. Retail sales should be out right now. Great idea, Dale. Let's can we get a coin
It's
for
not
that?
my
Good
idea.
numbers. Good
Good,
numbers.
Strong retail
0.6
Oh,
headline.
sales.
Control
Look at
good.
that. Bet against the
Oh,
consumer,
I
U.S.
bought
consumer
underwear
at
and
your own
socks.
peril.
Here in California, retail sales may fall because um, to prevent just the looting in stores where people don't get arrested anymore. Governor Newsom is going to pass a law to lock up the underwear and the socks in the stores.
Wow,
Lock them up.
that's crazy.
Yeah,
Crazy.
they're gonna have locks on the underwear, so you can't you can't shoplift them anymore. You have to go
You've got
commando. Huh?
you've got locks on your underwear, haven't you, Dale?
Oh man. Yeah, hey,
Yes,
yeah,
on
that
my
solves your problem,
Pampers.
Dale. You don't have to wear underwear anymore. There you
Keep,
go.
keep the ladies out.
Yay!
Free balling it, baby. Free balling it. All right. Hey, guys, I want to thank everybody for being here today. And if you found our tradertainment entertaining, make sure you give us a thumbs up. If you're watching us on YouTube, make sure you share our links on social media when you see them, and make sure you take a gander at ForexAnalytix. Jump in the community so you can joke around with Kman, Ryan, myself, and a lot of the other crew throughout the course of the day. Dale, I'm going to pass it over to you so you can hang out with
Chris.
Chris.
Yeah,
So,
and everyone join today if you're not a member. Just do it for me.
That's
Baby
right.
needs shoes.
Do it for the Gipper.
Do it for the Gipper. Anyway,
All right,
Chris.
and Chris, I hope you're staying warm here.
Yeah.
I actually got to take my convertible top down yesterday, so
Wow.
maybe we'll get warmer weather for a couple of days. So hope you're staying warm.
No way. Yesterday was it. All right, Chris. Welcome back to F.A.C.E. How are you?
Dale, Blake, everybody, how are you?
Good morning, Devil Dog.
Happy New Year.
Good morning, Blake. Happy New Year, Blake. We made it through our 2-week winter back into the 70s here.
Woohoo!
Yeah.
My flip-flops are officially back on today.
Yeah, enjoy
Attaboy.
the next few months before hell comes in here. So anyway, Chris, what's top of mind as we, begin halfway through the first month of a new year? Where's your head at? Okay.
I got my screen up for you.
Got it.
Now that Bitcoin has given back the oxygen to any other subject on the markets. I'm looking at we're at all-time highs right now, and I'm gonna start with NASDAQ as the we're heading into the all-time highs, I guess is what I should say, on both NASDAQ and S&P. I could back up into take a look at
S&P did it. NASDAQ, I don't think did it.
We're right there. In either case, it's a we're just breathing on it. Things that are interesting that at least in my analysis and each time I've been on, I've talked about this, and I decided to actually write a little bit more about it. So it was I'm not just
you were bullish last time and right, Chris.
I got bullish, whatever. I it's easy for me to say it right now, so I say whatever. October 2022 was the big signal to me that it was done. October 2023 was a question, but it didn't give it up, and I could show what I was looking at in both instances. And I will after I go over this here.
Newspaper. So you think there's
Correct.
potential for a top here?
I do not. I think that
okay.
So what are my notes here are I just want to go over this thing that I used down here, this number line at the bottom. It's called the SQN indicator. It's free on TradingView. I wrote the code, put it out there. So I took it from Dr. Van Tharp, so there's nothing proprietary on my end. I just used their work. So as they say, stand on the shoulder of giants.
Yeah. There's nothing new under the sun.
Correct. Especially in the market. We just named it differently or something.
So the different color codes give you are your tell for what you should be doing in the market.
So the way I like to do is I want to start with, we all talk about top-down analysis. It's the market regime. What is the market we are in? What is the market regime we're in? It's like weather, middle of winter, snow, middle of summer, hot, whatever. What are the most likely characteristics that you're going to see during that period of time? And you just focus on those. You don't have to focus on the other 1,000 opportunities or outcomes that most likely middle of summer in Scottsdale. I'm not going to worry about snow, right? Same sort of thing here. So market regimes can give you top opportunities, trend opportunities, grind opportunities, bottoms, or crashes. It's just when you're in a certain regime, those are the things that are possible. It doesn't mean that they're going to happen. It's just now you can open up that you could open up your mind to the idea. Currently, we are, if we go a little further down, you can see that that's in the green. It's hard to kind of see here, but a green. And what that represents is just a quiet, trending higher market. It's moderate volatility and, not really big daily changes. So yesterday, down 32 bips or something like that. The day before, up 15 bips. Nothing fancy. This is happening at all-time highs. And that is something that's behavior that you don't, that's not aggressive. I got to get in the market. Oh no, every penny I have is deteriorating. Get me in the market now. Behavior. That's just bored behavior. That's slowly getting involved. And that's where we are in both the NASDAQ and the S&P. That is the last time we were up here was a completely different story. So what we can see if we look back, it's kind of trying to make sure. But you can see we get these blues in here, and blues
much more enthusiasm,
way more, and we all know it, right? That was the end of the stimmy checks and all of that. Right now, we've spent 2 years plus just working through that, and since then we've gone up a good way. But we've not done it in a straight line. We've certainly not done it in a way that back here in June and July was frenzied. There was a lot of frenzied buying. Everybody was dying to get into the market. Right now, it's so quiet and dead. And maybe it's just my own little bubble. But that's a bit of a perspective that I'm looking at this thing. Is we're at all-time highs. We've already worn out 2 years worth of prices. And we're back to where we were. It's just now we have a lot more stable. We have 5% interest rates. We've got people are not living off of stimulus checks. They're laying off at big tech firms. They're getting rid of all the excess that they had, and yet we're still at all-time highs. So that to me, just a breadth or just an environmental indicator tells me I'm not too worried about the downside. When we get into,
are you in a melt-up camp that we have
no, not
to
at
go
all.
blue? We have to go blue before we get a top.
Yes, you cannot get a major market top until you go blue. So that is the aggressive. Now, a nuke in somewhere could change things. Always open to that. But I'm going to stick with my statistics that say we don't have a major market top until we hit blue. And I consider a major market top a 10% correction. That could also be a 64% correction, but the minimum of a major market top is a 10% sell-off. And we do not get those typically until we have printed blue. And this indicator just measures the direction and the percent change of the last 100 days averaged. So it's nothing fancy at all. It's basic statistics. It's just which direction are we going and how fast are we getting there? And so without blue, meaning without like 1.5% daily changes consistently, we're not going to get into that major market top environment. 32 basis points or whatever it was yesterday. 37 bips on S&P yesterday is not the sort of thing that indicates a major market top. And then the second thing I want to look at is
there is an expression that backs up what you're saying, is that markets bottom in silence and top with violence. So
Absolutely.
You could use it.
Yeah,
Go
I
ahead.
could use it. I have,
It's on you. Yeah.
yeah. So another thing that is interesting, I have this private group that I work with, and at certain periods of the cycle, so go back to S&P here, NASDAQ, in November 2021, it was just packed. There were people hand over fist trying to get in. Down here, October 22, 3 to 5 people showing up. Going into June of this year, June of 2022, and June of this year, 25, 50 people a day in there. It was just packed. This week, right now, about 5 people.
Yeah, new year, no interest. Yeah.
What are people always doing at the beginning of a new year? It's new year, new me. I'm going to be focused. I'm going to dial in. I'm going to get involved. I'm going to do these sort of things. Like I need to be disciplined into the trading thing. And it's not just me. I'm talking to, the macro ops guy. I'm talking to all the people I know, and they're saying it's so quiet right now at all times. I can't recall the last time we've seen it so quiet in our, in communicating with people. And I'm curious to see how it's working out here with you guys. But at least the people I've been talking to is just people are not getting involved in the markets like they have been. Even 6 months ago, they were far more involved. Have you seen the same or different? Right. Well, it's 2 years of grinding for sure. That's what you need.
I mean, maybe they, their financial positions have worsened.
Yeah, for sure. And we're at all-time highs in the market, right? And rates are stopping theoretically. Houses are starting to sell. People are doing things. But you're not seeing spikes in things like Nordstrom's. If we look at a Nordstrom chart,
okay,
right? Where's that? That's not a high. Ross. So Ross stores. I forget how to do. Oh, there it is. Ross stores
today.
Yeah. Well, Ross discount all-time highs, right? Nordstrom's, which you can get the same shoes at Nordstrom's. You just have to wait a year at Ross.
So there's a lot of bifurcation even within the same sectors.
Big time. So the discounters are really doing good.
Yeah, you have to get the stock right. You can't just say, well, I'm bullish retail and pick any retail stock.
Not at all. You could be the contrarian here and say, okay, well, I'm expecting Nordstrom's we're going to make a move back to, frenzy. People are showing off that old 80s, 90s thing of conspicuous consumption. We saw that, in 2021, we saw people were buying the Rolexes. They were buying the nice cars. They were doing the things. Now they're not, and there's no push for people to do it. And so, these are simple things that you would expect to see at all-time highs. And, we just got done with Bitcoin. Bitcoin's another really good timing indicator of when you're at all-time highs. We in 2018, that's when we had volpocalypse in the equity markets. 2021, well, we
got some
right?
blue here before the peak, but not the same kind we had at the beginning of 2021.
Yeah. And well, just one other point on that is you need to understand the underlying incentive of the market you're trading. So Bitcoin trades differently. So this blue and green and red and everything is different for currencies, for metals, for an indice, because when NASDAQ and S&P only it's an algorithm that sorts the best of the best. So the only way you get in the S&P 500 is if you are 500 or better public companies out there traded. If you're not in the S&P. So by design, it's always removing the lesser companies and the better ones are in. So it's optimized to go higher, just as you would put in your best running back. Your running back gets 100 yards a game and your other running back gets 10 yards a game. You're going to stick with the 100, right? And when he drops to 10 and the other one kicks up, same sort of things there.
Rotate them.
You bet.
Yeah.
So, as I wrote,
you're sanguine.
I'm saying, yeah, we're gonna see higher. I think we're going for the next 2 to 3 years higher. Wow. Definitely not a straight line. But it's closer to 2011 and 2012 in my mind. For those of us young folks who were trading back in those days, More similar to that, where everybody was really shell shocked from GFC, from Arab Spring, from Euro debt. Everybody was very cautious, and nobody wanted to be aggressive. Nobody wanted to be known as the bull, because the last time somebody was bullish, everybody got
Well,
got
it's
their
not
butt
like
kicked.
that now. I mean, the bulls have been doing victory laps.
Maybe, yeah. To be honest, I'm not sure.
Tom Lee, David Hunter. I mean, all these Super Bowls have been doing victory laps. Watch CNBC, all the people that are long, they've been long, and they're not afraid to admit they're bullish. They're more
Yeah.
embarrassed to say they've been bearish.
Well,
Don't you notice that?
I don't, and I appreciate the data point, because I'm not watching TV during the day.
Okay.
I'm
I
kind of a
wanted to ask
coder.
you about something. I saw a chart of insider selling, Chris,
Yeah.
and it's off the charts. And within a week, it more than doubled, and it was
Hmm.
already off the charts of reading. You put any weight into people that know their own companies and are dumping stock?
Uh, depend if it's like everybody's doing it, that's obviously going to be a sign. It's not anything
Well, there's a
that I
lot of it.
monitor,
Yeah,
so
okay.
I can't
Uh,
speak to it
anyway,
exceptionally. But
someone I know that follows it said that they're usually corporate insiders are usually 3 to 6 months early.
yeah,
So I said, well, I think I could qualify to be a corporate insider
yeah. Well,
because I'm usually
I
three
oh, I get it.
3 to 6 months early.
See,
Anyway,
you had to spell it
yeah,
out for me for a
yeah, it's
second,
all
and
right. It's early.
I'm slow. I'm
It's
slow.
it's okay.
We're
So,
us West Coast folks.
what else is on your mind?
Uh,
Continuation of a bull market for years from
I think
Crisco.
so. And it's definitely not a straight shot. I will definitely have 20% pullbacks, 30% pullbacks along the way. Um, even if we just look at the chart right here, like this was COVID, right? It was such
Yeah.
a jarring event to the world, but here we are. What was that?
Now it looks
9,000.
like
We're
a
at
blip.
17,000. It's almost a double since
Yeah.
then. And
Yeah.
the last thing you would have thought was that at the bottom, even up in here, we were all thinking like, okay, this thing has to cool down. And it took so long. It that distance doubled before it actually cooled down.
Yeah.
So I think, so much of the stimulus, the way that we changed after global financial crisis with the money printing, I think that's a lot more, that's going to be a lot more prevalent, or consistent. Anything that happens, they're going to be able to print their way out of it. And we're going to keep going on this thing. And as always, because we are the global reserve currency, we do it. That's the difference between it being done in history. I'm not saying that it's right. I'm not saying that it's just a thesis I have, that's probably going to keep the party going, and people are more focused on post or pre 2008 economics than post 2008 economics, because this is an experiment that really hasn't ever been done, and so far it's only been I guess 15 years or so of it happening, and we just don't know. So
All right. Well, let
that's
me
really
ask
what
you
I'm looking at.
this: as an ex-Marine, correct?
We call ourselves former Marines.
Former Marine. Okay. Okay. Former's good. When you look around at what's happening geo-wise,
Yeah.
and even the Revolutionary Guard getting involved,
Yeah.
what do you see? Do you worry about it? I mean, you have that background. I'm not saying that you were a general making, policy. But does it worry you what you're
Yeah,
seeing out there?
absolutely. Absolutely. It definitely rhymes as a world war. It but they all do. Anytime
Okay.
there's something, I think we hadn't really had anything as aggressive in Europe, and the Kosovo situation and all that. I
Yeah.
imagine had there been a lot more social media and internet, we might have had more of that discussion than we did during that period of time. But it wasn't Russia. doing it. It was, it was more of a small state civil war type of environment. That's big. Obviously, we have Iran as, we're talking Iran, we're talking Saudi Arabia, just right there. And then one of the
we have
most
two theaters. We have two theaters of war at this point of time. I guess Asia would be the last card in the domino, right?
Yeah, and well, and not to miss the South America as well.
That's right.
Everything flipped in South America these last few years from who was far left to far right. Basically, outside of Venezuela, it almost across the board in those countries they flipped from a socialist to a capitalist and capitalist to socialist regime, and so much of the political elite, I guess, maybe, or the people who are in there, just it uprooted so many different things. So I think that's a very delicate area that really Ecuador just did some stuff this past week too.
So considering what's happening globally geo-wise, and I know you mainly trade S&P and NASDAQ. Those are your two instruments. But does it make you want to own some gold or have some kind of hedge for the dollar? Besides
I am as
trading?
Crypto as you could be.
Crypto. Okay.
I'm a crypto guy. I do got a little bit of gold, maybe or maybe not, buried in a bunker in the backyard.
All right. So crypto is your haven, your escape plan from whatever happens. Okay.
Yeah.
Do you do altcoins too, or just mainly Bitcoin?
Yeah, definitely. The money to be made is in my opinion, in altcoins. You can move a lot more money around in Bitcoin and Ethereum. I use algorithms to trade that long short more so there. But on the I'll rotate on a momentum side through the altcoins.
Right.
I mean, I'm in this guy right now, which back from 120 trading up at 160 in the last 2 days. Or yesterday and today. So this is what I'm in, and the way I trade alts is just pure momentum. I'm not trying to make markets or take long term. I don't know what this does.
Like a 30% gain, 40% gain in a couple days.
Yeah, well, look, and it went from whatever, let's call it, in the beginning of December, it went from about 75 to 500 and crashed all the way down to 100.
Wow.
And we're just starting to get back. So I'm there for the momentum.
Wild West, man.
It is definitely the Wild Wild West. It's 1999 tech stocks. There's no reason in my mind, there's no real reason for me, I should say, to get very heavily involved in the stories and everything that's, it's kind of hard to.
Who would have the time? So you just plug in your alarms and go with it.
It's momentum. Yep. I'm just there for the momentum, and the patterns repeat, though. They just work differently. They worked in Apple, they work in the NASDAQ, they work in NVIDIA. They worked in Yahoo in the 90s, 2000s. It's a very similar path. It's been around for thousands of years. Jim Simmons is the best at it. And so for me, that's really been my big push. Gold was really good.
Was he a Chicago guy, Jim Simmons?
He was. That's where he wrote his paper against Eugene Fama. Not against. He was Eugene Fama's student who wrote the efficient market hypothesis. And Jim Simmons came in and said, he was a PhD student, wrote about momentum and said, yeah, everything's right about that except for momentum. And Eugene Fama says, yeah, you're right. That's the only thing that's wrong about my thesis.
Interesting.
Yeah. And so
I knew a cattle trader named Jim Simmons on the floor, but maybe it's not the same guy. So Chris,
different Chicago guy, University of Chicago.
Okay. Oh yeah. They're, that's like that's
way
like
different.
MIT.
Yeah. Exactly.
So, anything happening with your business model you want to let people know about?
Yeah. So we trade together every day, very focused on intraday trading of futures. We're trading a lot in softs, so sugar, cocoa, cotton, coffee. We're trading a lot in currencies, and of course, NASDAQ and S&P. The futures contracts that are active and providing good momentum type opportunities. Very focused on algorithmic work and really helping each other with our algorithms as opposed to locking them down. And nobody can see my code. Sort of black magic world. It's
interesting you developed that SUV indicator, and TradingView wanted it, so that's pretty cool.
Yeah, they also yell at me whenever I try to make an update that they say, they have some rules.
Yeah. Well, Chris, I'm
rules.
a fan, and here's to you having a great 2024. You and whoever your words and charts touch, that you guys have a bumper crop this year.
Likewise, everybody here in your community, your group, you, Dale, love seeing your daily scriptures or notes.
Oh, yeah.
Those, just good stuff. It's you don't see it often enough out there.
Yeah, I once knew a guy who said, he loves his charts, and you have to trust him like you would your wife. What do you think of that?
I think you're right. I think you're absolutely right. And yeah. I mean, risk management, of course, but you can be wrong. But Richard's not marrying me. Sorry,
Okay.
Richard. Bummer.
All right. What a heartbreak. So
I was.
Anyway, Chris, thanks so much, for your contributions over the years, and people can follow you on X at Chris D Macro. And
That's
is
me.
that the name of, huh?
That's me.
Is that, yeah, and is that the name of your website too?
Website, pollinatetrading.com, right here. Pollinatetrading.com. It's kind of hard to see. Yeah. Pollinatetrading.com, Chris D Macro on Twitter. Hit me up, best I can to interact and share videos of my son.
Okay. Thank you, buddy. And good hunting, my trading warrior brother, Chris Dover at Chris
Always a
D
pleasure.
Macro. All right.
Always a pleasure.
So
See you,
thank
buddy.
you, Chris, and good hunting. And everyone, you could join the team in 17 minutes on the Morning Edge. Good luck today, and don't just count your pips, count your blessings. Adios.